Welcome to my YouTube channel, Ata X Forex Academy. My name is Ata. I'm going to show you how I made over $1,000 live trading on my Telegram channel. These are some of the trades I sent them. We made money. I sent them live. These are some of the withdrawals I made. I do send projection trade live on my Telegram. And then also make sure you subscribe to my YouTube channel, turn on my notifications so that you get notified whenever I upload new videos. So let's move over to the lessons. What are simple entry points pattern? Simple entry points pattern are those patterns formed on your lower time frame when having a higher time frame projection. For example, you have this on a higher time frame, and then on the lower time frame it looks much like this, and then this is your demand zone of your projection. This is a simple entry point pattern. This was the pattern formed when you got your entry, that is your mitigation on the demand zone. And this pattern is what we call a head and shoulder pattern, which usually our entry point is meant to be here, right? Now we have our POI, which is this demand zone. We have our POI, which is this demand zone, and our point of no return, which is the PNR, point of no return, right? Now, I've studied these simple entry points that are usually formed on the lower time frame. There are three types of entry points pattern that usually happen on the lower time frame in a higher time frame projection or a higher time frame bias. This is for a bullish scenario. It's also the same with a bearish scenario. But then this is the head and shoulder pattern. How do I spot them? How to set your entry, and also where to actually set your stop loss, and also how to use this simple entry point pattern to validate your bias or to validate your trade projection, right? So the second entry point pattern that I've studied and has been proven and tested, and I've been using it for over 2 years now, what we call the Quasimundo. This is an example. This is a higher time frame bias, and this is what happens. This is what happens on a lower time frame. I know you've noticed a lot of scenarios whereby markets gave a change of character and then did not come to the level of your order block that is using the head and shoulder pattern, and then it does something like this, break another structure, then expect the market to come back and take this internal structure before giving time frame direction. So this pattern was what was formed on the lower time frame using the Quasimodo. They kind of has same similarities with this head and shoulder, but there are very much of difference because an internal liquidity to be taken. That's an internal structure, which is this break of structure right here, and price came back to take out that move using the Quasimodo reversal. This particular pattern is using the Quasimodo reversal. Now, whenever you want to validate this, there must be a change of character to here, over here. That is same as this too. There must be a change of character. So this is your change of character, your choch. And then we have the third one, which is using the breaker block. Using the breaker block on a scenario, you see something like this. breakup structure back to the demand zone, and you see something like this. You see price mitigates your your demand zone. You see price mitigates your demand zone, and instead of taking out the change of character to show you that price is changing direction, it starts mitigating each other. It starts to mitigate each other. Now, how do you validate if this trade is going to go in your direction? The first thing you are going to wait for is a momentum, a push of price to the upside that breaks this this high with force, right? That's making it to cause a change of character, right? Now that momentum is what is going to validate this particular pattern. The momentum, there must be a momentum to validate this pattern. They must. So I expect price to come back at this breaker block and then mitigate it, which is called the point of no return, then causing it to break the higher time frame structure, right? So here is our point of no return, which can also um, be said to be our entry point on a trade. Now, if you use this simple entry point pattern, you are definitely going to avoid a whole lot of losses. I see some of you, you enter a trade, you enter a trade, it comes to your entry, it comes to your entry, you enter the trade, and then it moves, like it moves, and then takes you out. And then you wonder what is really happening. What is really happening? The price action can never be the same thing. The price action can never be the same thing. If you watch, go back and backtest some of your losses. Check the price action. Check what happened on the lower time frame on that your entry point. Check what happened. You will see that the price action was not worth it at all for you to take such trade, right? Now, to confirm your trade projection using this simple entry point pattern will save you a whole lot of losses. It will save you a whole lot of losses. So sometimes you wonder, why do I lose on this trade? Why do I lose? It's because you did not pay attention to what was necessary. Now, I said this one is the Quasimodo reversal pattern. See, any trade or any trade projection that will go in your favor must have one of these simple entry points on the lower time frame. I'm going to give you a chart example. It happens, I won't say 100% of the time, but at least 70 to 80% of the time. I have backtested this particular simple entry point pattern on the lower time frame, and it works like magic. It works like magic, right? So I've been using this simple entry point pattern to enter most of my trades, and I've also used this the same entry point pattern to enter some of my past trades. I'm going to show you some of my past trades, and you can see I got this sweet 10RR. Most of you that have been following me on X, you will notice when I posted this sweet 10RR trade projection, right? Now, if you watch, this was my POI. This was my POI. I waited for price to mitigate my POI, and then you saw price mitigated each other, showing you that there might actually be a problem, right? Now, did you see what happened? price mitigated each other and then pushed up, causing a momentum. The momentum validated my trade, right? Did you see this momentum? I then entered at the breaker block and I was able to catch about 10 RR trade on this particular setup. So it's as simple as that, right? I'm still going to show you some trade examples on how I use most of these simple entry points as a confirmation to my trade projection, right? So this is the demand zone. This is the demand zone. This is the demand zone. And then this is your change of character. This is the change of character. And then this was the scenario that happened on the lower time frame. This was the scenario that happened on the lower time frame using the breaker block. The breaker block pattern. Now it happens 70 to 80% of the time. So how do I enter trades from or using this simple entry point pattern, right? So you have price mitigated your order block or your POI respectively. Let's use the POI, which is the point of interest, which you all know about, right? It can also be called your demand zone. Price mitigated your demand zone, you waited for a change of character, and then your entry should be at this point. Your entry, you should be picking your order block. You should be picking that order block that costs this neck. That's the order block at this neck is what you should be picking as your entry and as your stop loss, right? So imagine you are catching a 5RR on all this, and then you are catching about 7 to 8RR using this simple entry points. Isn't that concerning? So sometimes I use these simple entry points to maximize my profits and cut my losses, right? So my SL should be below this mitigation, and then my TP should be at this high. I'm still going to show you guys some scenarios using this simple entry point pattern. So your entry should be at this Quasimodo reversal. That's after your internal liquidity might have been taken, and then you target the next high, and your SL should be below here, right? Now, if price tends to come back to take out this low, then just know that your projection is going to fail, right? Now we have we have these two using the breaker block. Your entry should be at this breaker block. I'll show you another scenario of this breaker block. And then your entry should be on the last, your SL should be on the last low that caused that momentum. And you're safe. Right? So this has to be the three most important simple entry points that you have to master for you to cut off your losses and also maximize your profits in this market, right? So when you're given a signal by your friend, you're giving a signal by anybody you want to take the trade, you can use this simple entry point pattern to validate or confirm that bias given by the person, or even your trade projection, right? So let's go over to the chart, and I'll be giving you some examples and some trades that I caught live on Telegram with my students, and I'll be showing you an example of how this trade pattern works, right? So over to Euro USD, using the simple entry point pattern. I want to show you a scenario of where I caught it live on Telegram. Okay, so this was the scenario, right? This was the scenario. This was the scenario, right? So if you watch, price was, let's cancel this. This was our POI. This was our POI. This was our POI. And then we had price come into it and then started mitigating each other. And then broke out with a momentum, right? And caused a change of character over here. And then our entry using the breaker block. Sorry. Our entry using the breaker block. So I'll show you where I sent same scenario on Telegram, and imagine you shorted from this particular breaker block. You should be having close to how many RR? Okay, almost 8 RR using the simple entry pattern, right? So let's go to the Telegram. Okay guys, this was where I projected the Euro USD. I projected Euro USD over here, and as you can see, I gave them a sign that we need a change of character and then a momentum, and then we enter the breaker block. And same scenario happened here, exactly the way I projected it, right? So for you to see how this simple entry point pattern works, right? So let's go over to other trade projection, and then you see how I've used you see how I this simple entry pattern works, right? All these trades I caught them live on my Telegram. So this was my trade projection. And then we had, okay, let's use the scenario of the one I caught on Telegram. Okay, this was when I sent out AU longs, and then this was it on the chart. So as you can see, price mitigated our POI. And we go down to the lower time frame to see what happened. Now, as you can see, you saw that price mitigated our POI, we had what we call the Quasimodo reversal. Now, price hit our POI and then move up with a momentum and then created a low and then broke structure again. Did you see it? The price came back to take out that low, and then our entry points, which should be on this level, right? And then we long from here. So, and I'm going to show you where I actually took this trade, right? I'm going to show you where I actually took this trade. As you can see, we got over 14 RR using this simple entry point, right? We are yet to give you of a head and shoulder pattern. Let's move on to, okay, yeah. Okay, so this was our initial POI. I actually had this projection, but I did not take the trade because I wasn't too active. So as you can see, price came to mitigate our entry and then give a change of character. Can you see that price came back and then mitigate our level and then pull up? So at this scenario, we were having about, sorry, we were having about, your stop loss should be above this, and then we should get over 5 RR on this trade, right? So this video is just to encourage every other struggling traders out there to put in the work and then use this simple entry points pattern and, you know, validate your bias, your higher time frame bias. This will cut off a whole lot of losses that you are supposed to have, right? So this particular trade that we got over 12 RR, this was the image of where I took them. Yeah, as you can see, I took some buys here. That's to show you that I understand the story of what Euro USD is trying to tell me. So it is very, very simple. It is very, very simple. I took a buy at this point. This was the highest point because I was trying to, you know, um, take double positions. I was trying to take a whole lot of positions. So, and the market was too fast. I was able to take about 4 positions using this simple entry point pattern. So, um, it's advisable for you to go back to your charts, backtest this simple entry point pattern. They are also going to help you and confirm your trade bias, your trade projection. So if you learned anything from this video, make sure you subscribe and also turn on my YouTube notification. Follow me on all my social media handles. All links are on my bio. And make sure, lastly, you are on my Telegram because you are going to miss a lot if you're not there. So thank you for watching.